Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Wednesday, May 10th, 2023. I'll jump right here, right now. Actually, I'm going to finish the concept here. We are in the midst of a long-term buy signal that played out last week when we closed above the 171.18 channel top by the required 1% margin, anticipating longer-term bullish continuation now for Apple. Over the next 3 to 5 weeks or so, 182.94, that is the January 22 all-time high, and over the next full year or less, this 217.88 long-term rising channel top. And so before I continue, just want to ask you to please click like if you would, if you haven't already. It helps us out a great deal in being found on YouTube. Also subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. That includes the daily Apple and Tesla report. And last but not least, please check out wickedstocks.com, where we offer a full suite of daily and weekly analytical videos just like you see in Apple, including the daily SPY report, the daily Triple Q report, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. On Monday, we put one out on waste management. All of that for $47 a month. We have a 5-day free trial, so you can go in, check it out for a few days. If you don't like it, you can bail, and no questions asked and nothing charged to your card. But I don't think that would be the likely outcome. I think you'll like what you see, and you may continue long term as a regular subscriber to wickedstocks.com. So, in the midst of a long-term buy signal, there is certainly hesitation. I don't think we should read much into that. The daily chart has 170.92. You can see this area, narrow zone between 170.92 and 171.18. I will say, I'll go back to this chart, that 169.47 is a level we'll be watching not only today, but really more precisely on Friday, the week itself. If we close back below the 171.18 formation by a 1% margin, in other words, 169.47 or lower on Friday, then we have a failed long-term buy signal. Sometimes this happens. Usually what happens is we actually get a continuation to the upside. The buy signals generally work, but not always, and not by a wide margin. And so, there is a chance, of course, that we could ease back. And if we do close 169.47 or lower on Friday, that failure should itself not only set off selling because of the long entries who need to bail on that long position, but also because, it's just a sign of weakness. How weak could it get? I will say this is probably what I'm looking at here. This in pretty quick order within several days, 165.67, where we could actually bottom out by that point in time through next week. And then we'll just kind of see where it goes from there. But honestly, if we close back below that long-term channel top at 171.18 by the required 1% margin of 169.47 or lower on Friday, 156.79 I think becomes our realistic 2 to 3 week target. And we could even continue further south into the mid 140s. There's another channel bottom coming up here, but I don't even want to go there because I don't think it's likely. But if we close at 169.47 on Friday, it does become likely. 156.79 then likely within 2 to 3 weeks. If you like the daily Apple report, a wickedstocks.com membership delivers regular daily video analysis in both the SPY and the Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Do yourself a favor and check out our other content by clicking the link below. A settlement then below 165.67 should do that inside of 1 to 2 weeks. 156.79 at this point in time able to contain selling on a monthly basis. By that point in time, we could be talking through July. So that is kind of the big picture. It hasn't occurred yet. And so I will go back to this weekly channel top at 171.18. This is bottom picking territory for the day, for the 3 to 5 day swing traders, for the 3 to 5 week position traders, and even for the longer term investors. The Apple stock is a solid buy above 171.18, and it becomes a solid bail out of that long position on Friday at 169.47 or lower. Now, inside of all this, we have minor points working our way up. I do have 174.85 today, still a session containment level. We tested that on Friday, backed off. Monday, Tuesday, we backed off just a bit. 174.85, if tested, can contain session strength. And by the way, if we close above 174.85, good low for the week, 178.44, then likely within several days where we can top out into later next week on our way up to 182.94. So the 3 to 5 day swing trade, if you haven't bought it yet at 171.18, or when we settled above it, 171.18 last Friday, you may consider going long above 174.85 because 178.44 is likely within a few days where, excuse me, the 3 to 5 day swing trader could take profits. Now, if we close above 178.44, and it's not going to happen today, but if over the next few days it does, because we have seen that kind of volatility in the past, then the 182.94 all-time high going back to January of 22 becomes an easy 3 to 5 day target. And that area able to contain weekly buying pressures, possibly into later June, so forth and so on. We have a rising channel top presently at 189.50 and climbing into the upper 190s, low 200 area as we move into June, so forth and so on, up into, as I said earlier, the 217.88 area climbing weekly. And that is kind of the big picture to the upside. So once again, if we closed below 170.92 today, I think bailing on a long position, if you're a 3 to 5 day swing trader, is certainly appropriate. If you are a more of a 3 to 5 week swing trader or position trader, in other words, once again, anticipating over the next 3 to 5 weeks that 182.94 high, and we close merely today below 171.18 or 170.92. I don't think it's necessary. Obviously, it's a bit of a nail biter if we close below 170.92, but it really would be, once again, a weekly settlement at 169.47 or lower. That is a 1% violation of 171.18. Remember, these line studies are precise, but they also represent kind of a band of support and resistance, a zone, if you will. And I equate it to a rubber band. If we break 171.18, the rubber band is stretching to the downside. If we close at 169.47 or lower, the rubber band snaps. And we then likely to continue south, as I said earlier, into into the mid 160s within 3 to 5 days and into the upper 150s within 3 to 5 weeks. I'm just going to leave it at that for today's Apple Report, pushing 8 minutes. Please click like, subscribe, check out wickedstocks.com. I'll be back tomorrow with Thursdays. You have a great evening.